Welcome to Divorce Mortgage Strategies, brought to you by the Divorce Lending Association, where clarity meets strategy in the financial side of divorce. Whether you're a family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go-to resource for trusted insight into how real property and mortgage financing intersect with divorce outcomes. We don't just talk about houses. We talk about strategic solutions that protect futures. Let's dive in. Today, we welcome host, certified divorce lending professional Theresa Jones, and her guest, Jeff Rollins.
Welcome back to another Divorce Lending Association episode. I'm a guest host, Theresa Jones, a certified divorce lending professional. And today I have with me Jeff Rollins. And Jeff, I think I've known you my entire life.
Yes, it has been pretty close to your entire life.
Pretty close, because we went to grade school together and different things around the years, but always end up working with you, and your expertise is amazing. And I don't know how many people I have sent your way that you've been able to help, but I appreciate it always that you're available for me.
Thank you. I appreciate you and your family very much.
Our families have been close forever, and I know that lots of stories. So tell me a couple of things with your experiences running Best Tax Solutions and helping so many clients of mine in Nashville and others. What first took you into approaching complex situations like asset division or support payments under federal rules?
Yeah, so I am an accountant with Best Tax Solutions. I work with my father, Norm Rollins, here in Nashville, Tennessee. He is a graduate of Vandy Law School. So he and I have been working off and on for 30 years, maybe. But we always come back together, as family does. So I specialize in individual tax preparation. He tends to specialize more in business tax preparation. And on the individual side, it's like anything else. Individual taxes, whether you're dealing with someone that's single, whether you're dealing with somebody that's married, maybe either they're married filing joint or married filing separate. And then we come across a lot of clients that are divorced, that are either going through a divorce or in the middle of divorce, or it's afterwards. They've already been divorced, and the questions are, well, what do I do now? What comes up next? So I've dealt with a lot of that. Unfortunately, divorce is a part of society. It's a part of our life. It happens a whole lot. Very difficult, very, very difficult time in my life, but it does come out of it. So I've kind of tailored my practice a little bit more towards the divorced clientele. And I understand it, right? Having gone through it and having lived it. And there's so much information out there that I encourage everyone to look at. I would first say start at irs.gov. The IRS has a massive amount of information on their website, and it is all free. So go to irs.gov, go in your search engine, and click divorce. And there's a lot of information that comes up. But as I've seen in my practice, as it's grown, we've had a lot of clients, of course, get divorced. And the first question is, what, do they have kids or not? And there's a divorce decree that will occur in every single divorce, and that will outline specifically, item by item, detail by detail, what is to happen after the divorce is finalized. And that includes taxes. And I've seen, Theresa, even talking to you, where that's come back to potentially damage one of the clients in the past. Where you sign your divorce decree, where it outlines specific information without knowing what's going to happen in the future. You do the best you can, of course, at the time, but unfortunately, sometimes you don't protect yourself enough. And we're now talking amongst Theresa and I about putting more safeguard provisions in that divorce decree language. Really,
it was an
truly
eye-opening experience for me when you pointed out that potential tax implications just from items that weren't known facts at the time that came up later, and now all of a sudden people are on the hook for taxes that they wouldn't have been if they had been aware
Right.
of the facts in the beginning. Because it seems like such a simple thing. We were married, we'll sign, in the one I'm thinking of, sign married filing jointly. But you're the one who pointed out that if they don't have income and they're signing married filing jointly, then it is a complete tax burden that they're potentially exposing themselves to when they didn't owe anything. And so
That's exactly right. And the first thing I counsel my clients on is look at your withholdings. Look at the first thing you need to do once your divorce is finalized or you're going through it is you're no longer going to be married filing joint. You're now going to be either head of household if you have a child or children, or single once the divorce is final. And most people, they're working, it's dual income households, but most people aren't having enough withheld because married filing joint, you get favorable tax exemptions. You get a favorable tax status. But once you transition into head of household or single, what I'm saying is they're not withholding enough on your W-2. And then that creates a shortfall come tax time. The first thing I would recommend is they have a withholding estimator on IRS.gov. It allows you to simply check how much you're withholding. And once you do that, then of course you go into your HR department and change your W-4, and they will withhold more or less if you're lucky, depending on the situation. But I always counsel my clients that taxes, you're going to be responsible for your taxes no matter what. So even if you're married filing joint and have been your entire life and you're going through a divorce and you just happen to be the person that signs the bottom line, well, now you need to really look at it, step forward and take control of your taxes.
we'll find somebody like you to go over it and
Correct.
explain it to you. And speaking of, just if someone is awarded alimony, because I know that law changed a few years ago, who is responsible for those taxes? The one paying the alimony or the one receiving? Or does it depend on the type of alimony?
So it depends on the type of alimony. And I've got a checklist here. That's another wonderful question. That is at irs.gov. So alimony used to be where alimony was a tax deduction to the person writing the alimony check. It used to be that way. And then it used to be where alimony had to be claimed as income no matter what. But now there's pre-2018 rules, post-2018 rules that have changed all of that. So I need to go on and double check that for you. While we're talking about alimony, other things that come up, right? Property transfers, 401k, IRA positioning when you're going through a divorce. Those are all important and potential taxable items. If you're entitled to part of your spouse's IRA,
That's a huge one.
401k, we see it. You need to make very clear that you roll that over per those provisions into your own IRA. Because if you do pull that money, then it is 100% taxable with a penalty.
Right?
Correct. Yeah. Early withdrawal. So that's
and then it throws you into another tax bracket potentially. And
absolutely. As far as property transfers, property rights, that may not be taxable. We see a lot of times you can do a quick claim deed. It can roll over to your divorced spouse, and they don't have to pay taxes on that right away if there's not a sale included. If there is a sale, that's something that's forced, then yes, there's going to be something to look at. You need to look at all of those provisions regarding real estate sales. So be careful of that. What else is there? Spousal. So if you do, here's another one that we've come across, Theresa. You both owe taxes. You got a large tax liability owed to the IRS, and the husband was the primary breadwinner. Maybe he owned a business or two, and you owe a lot of money to the IRS. There is something called innocent spouse relief that is out there. We see a lot of women that don't know that. They don't know those provisions on innocent spouse relief or injured spouse relief. So those provisions are also available at the IRS to be able to claim that for those one person that was damaged.
Is there now if they have let's just talk about that a little bit more because it's something that I have not been very familiar with, and I'm sure a lot of people have not been very familiar with, if you don't mind. Innocent spouse relief, is it going to be dependent on how the marital divorce decree was written? Or is it just because, a lot of times when you're not the one in the business and you've always just signed and you were together, what does this innocent spouse relief, what could it potentially do for you?
So you're right. Everything that we've seen goes right to the divorce decree. So the divorce decree is basically their Bible. And everyone's is different. Everyone's has different language in it, and you really need to watch that language in your divorce decree. So talk with your attorney, make sure that language is correct of things that pop up in the future. As far as innocent spouse relief, you can file for innocent spouse relief, and that may, again, you have to look at your divorce decree, but if you do owe taxes, there is a request for innocent spouse relief. It's Form 8857. I'm looking at it right now. And what it does is request relief from tax liability. So if you owe money and you owe it, it gives you a relief from tax liability plus related penalties and interest when they believe only their spouse or former spouse should be held responsible for all or part of the tax. So simple as that. There is a form that you can file, that we can help you file, or you can file at the IRS. And that's it. If you believe that you don't owe all the money, then you can file that form. Now, whether the IRS accepts it or not, it's a different, that takes time. But there is, yeah, there is absolutely, that's out there, and a lot of people don't know it. So that's there. Again, I encourage everyone, the IRS, it's like the big bad wolf. The IRS is a massive government entity, but they have an amazing search area. So don't be afraid to go to irs.gov, click on the search, and then just start spending some time. They have a divorce checklist, which is pretty cool, which, again, one of the first things it says was, hey, make sure you change your withholding, things like that.
One of the things with all my banking experience, I always counsel people, make sure you go change your beneficiaries on everything.
Very true.
Because, you're going to have your 401k that you set up and your IRAs, if you have them, life insurance, you need to go through and change all of those beneficiaries too.
Very true. That's very smart because a lot of people don't.
It's not something people think about on a regular basis. So
no, that makes sense. They don't. Yeah, there's an entire section on divorced or separated individuals. So it gives just a massive amount of information. If you have dependents, if you have children, you need to potentially look through this because you could be eligible for additional credits filing as head of household. Now that you're no longer filing married, filing joint, now you're head of household, you may be able to get child and dependent care credit that you may not have been before. If you were itemizing your deductions before when you were married, maybe you're not going to be able now, but you need to just look through the entire situation and see where you fall.
Yeah, that is important. Let me ask you this, Jeff. In a market like Nashville, where real estate growth has been completely insane, and we don't have a state income tax, thank goodness, because big benefit for us in Tennessee. I mean, sales tax is terrible, but no state income tax. What are some of the most common tax pitfalls that you see divorcing clients face? I think we've touched on the alimony a little bit, but how do you help people address these pitfalls?
Yeah, so we see a lot of our clients maybe being pressured to, if they own the home together, they own their primary house with their spouse, whether you're the husband or the wife. Well, we see the other spouses are applying pressure to get out of the house, to sell it, and we see it, to transfer it to them at a lower than fair market value. And we all know that in a divorce, it's very emotional. There's a huge emotional aspect and a big mental aspect. Sometimes you just have to slow down in the decision-making process because we've seen is a lot of clients will make a mistake. Yes, they have a great attorney that's representing them in the divorce, but they just want the thing over. Maybe they just want to be done with it. They're tired of fighting. They're tired of, those, we know those things that have happened.
Absolutely. I call it divorce purgatory, and you just
Oh,
get
yeah,
emotionally exhausted, and you're like, I don't care. And so
you don't care.
many clients just take it all. I don't care. I just need out.
And that's an irresponsible decision, that could hurt you financially. And we've seen it. I've seen it. And so I just tell
Seen it.
clients, I'm like, just slow down, take a deep breath. Just get away, because you want the property. Property in Nashville is increasing. Home values are increasing. And you don't want to trip over yourself, getting out of this divorce. The divorce is going to happen. Just take your time, do it correctly, and protect yourself. That's for sure. Protect your assets, protect yourself, and hire the right people to guide you through that process. Like yourself, Theresa, they need to make sure they've hired you to get them through that lending process, right? To get them through all of that.
Right, just going through and then, I mean, I've always said, attorney is a huge part of this, but just like it takes a village to raise a child. That's when I first started, and I've mentioned this before, when I first started realizing how many, and I was fortunate that I had a really good friend who was financial advisor, and a really good friend who was a realtor, and a really good friend who was a title attorney, and I had you there, and it really took everybody just to help me get through my very simple divorce. Made it through without all of your help. And that's when I realized just how many people go through a divorce with, just their attorney, and
Right.
you need a team around you, whether it's friends with expertise or hiring people to help you get through it. It's so tough to go through.
It's tough.
Yeah, it is very tough.
Let me circle back here real quick, if you don't mind, to alimony.
Yes.
So I found some answers for us. Alimony and separate maintenance payments. Okay, so payments made to a spouse under a divorce or separation agreement may be considered alimony or separate maintenance. We know that. The details of your divorce agreement affect how those payments are taxed. So if your divorce agreement was signed in 2019 or later, payments aren't deductible by the spouse who pays them and aren't included in the receiving spouse's income. Okay, so basically it's a wash. The person that writes the check in 2019 or later, those are not deductible by the spouse anymore who pays it and aren't included in the receiving spouse's income. So washed out. If your agreement was signed in 2018 or before, payments are deductible by the paying spouse and included in the receiving spouse's income. The only exception is if your divorce or separation agreement specifically changes the tax treatment of your payments. So 2019 or later, 2018 or before, that's something that alimony is normally not tax deductible to the person writing the check, and normally not treated as taxable income to the person receiving it in 2019 or later for different circumstances.
Gotcha. So if I'm understanding you correctly, used to be whoever was writing the check then reduced their taxable income by the alimony written, and so they would actually be paying less taxes. And the person receiving it would have to count it as income, so they would be paying taxes on it.
That's right.
Now that's reversed, so the person writing the check cannot lower their tax burden. Income.
That's right.
And the person receiving it doesn't have to. But again, I would say always check with you or another competent tax professional. That's my banking coming back into play. Always check. I am not a tax expert. Always check with your competent tax professional. That's in my head now. I can't help it.
That's right. That's right.
Okay. So based on your expertise, and we have talked about a number of recommendations, but what are the top recommendations that you would offer divorcing people? I would say in Tennessee, but really you and your dad do cases all over the state.
Yeah.
At this point, let's just say timing asset sales or different things or decree language to avoid any IRS surprises.
Absolutely. Usually, speaking of that, we were talking about property transfers as well, because we see a lot of that. But normally in property transfers, if you own it If the transfer is because of a divorce, there's usually no recognized gain or loss on the transfer of property between the spouse or former spouses. So you may have to report that transaction on a gift tax return, but it is not taxable. It is not. So we see that a lot. Just regarding those property transfers that come up. We see a lot of these quitclaim deeds that come up, right? Quitclaim deed to the former spouse or to yourself. So just make sure, as you go through it, make sure whatever your situation is, that if things have to be filed with the IRS, make sure it's done timely. Again, hire a competent professional to do it. Hire a correct accountant. Hire someone that knows the ins and outs of it. I am extremely fortunate to have my father as a tax attorney. He loves to argue and fight with the IRS, and he does a lot of audits, and he does it really well. He's been practicing now 50 years in the Nashville area, so he's got some great insight. He knows a lot of information that's out there. For me, it's a pleasure to work with him because I can pull his brain and bring something up that I haven't heard of, and he would counsel me on it. And a lot of my clients have access to him, right? So a lot of those things, when they come with us, if they hire me at Best Tax Solutions, then I always say you're getting me, but you're also getting my father. You're just not paying $600 an hour, which is a good thing.
Always, if we can, not that your father doesn't deserve $600 an hour, because as you said, he is a wealth of information, and I've
Right.
seen some of the tax liabilities that he has managed to reduce or make go away completely. It's incredible, some of all the things that he does. But yes, especially when you're going through a divorce, it can get very pricey, and so finding ways to reduce that expense helps. So if people wanted to get in touch with you, Jeff, is there
Yes.
a website?
Yeah, website is www.besttaxsolutionsllc.com. So that's my company, Best Tax Solutions, here in Nashville, Tennessee. Yeah, that's the easiest way, just to check us up, check us out online. And as we're talking, I found this little checklist that I thought was kind of cute, important. Not cute, but it is important to know this, that the very first thing you're doing, right? Your filing status. What is it? What determines your filing status? And that's the very first thing the IRS says. It talks about it. Once you're divorced, your filing status determines your filing requirements, standard deduction, eligibility for certain credits, or tax. So that's super important. And it always depends on whether you're married or unmarried on the last day of the year. So tomorrow, right, we're last day of the year, December 31st.
Yep.
If you are married, still legally married by tomorrow, then your options are married filing joint or married filing separate. Those are the only two options if you're legally married. Now, if you are divorced, tomorrow you get that divorce done and signed by midnight tomorrow night, then your status is determined that day, and you have options. Head of household if you have children, single. Those are the two items, and your withholding will go along with that. So a lot of people don't know, what do I file as? Well, it's determined as of 12/31.
That wouldn't just be you both signing the marital divorce agreement. That would have to get signed by the judge by that day, or would it be you signing the MDA?
It's when the judge signs off, when it's legally done.
Okay.
When everything is done off and signed off by the judge is when that's your date, your divorce date. If you're lucky, maybe the judge signs it tomorrow and you're done. Or you hold on another year. We see a lot of people who talk about name change. You're going through a divorce with taxes, right? With the IRS. So you can go to SSA, Social Security Administration. You can legally change your name back to your maiden name if you want, but you have to file your tax return using your name on record with the SSA. If you decide you want to do that, great. Just make that change, and whatever is legally shown on the SSA has to be the same as filing your taxes for IRS rules. Tax withholding, we talked about that, making sure that you are withholding enough from your paycheck. So they do have a withholding estimator, which is important to look at. Alimony and separate maintenance payments, we talked about that. It is not taxable. It is not tax deductible. It doesn't be claimed as taxable income. Claiming dependents, right? So we see that a lot. If parents split custody 50-50, and they aren't filing a joint return, who gets to claim the child? And that's, if you can't agree, there are tiebreaker rules out there from the IRS. Child support payments aren't deductible by the payer and aren't taxable to the payee. So child support is not deductible either way. But a lot of that is going to 100% be driven by your divorce decree. So that language will say who's claiming the dependents, who's claiming the children, when you get holidays and all of those information. We talked about property transfers, retirement plans, and IRAs. And Theresa, you know more about this. We kind of touched on that, but we see a lot of these people that get divorced and they are entitled to a portion of their account balance, but they may not have the information to do the right thing on it. So there's a lot of rules out there, right? There's a lot of rules regarding that.
Especially when you're talking retirement accounts, you definitely want to move those to not trigger any kind of taxes if you can avoid it, because that, can
Right.
absolutely put you in another tax bracket plus penalties, and then you're paying a lot more than you expected.
Right. Yeah.
But we are actually out of time, and I just really want to thank you so much for coming on today, because I know every time we have a conversation, because clients are coming in or something, it always uncovers something else as far as taxes and divorce. And it's amazing to me, and much as I hate math, the numbers and the details always are interesting to me, just because, I always say it, Uncle Sam, he's the biggest deadbeat uncle in everybody's family. And so give him what you are legally obligated to, but don't over give to him, because he has
Correct.
plenty.
Correct. Give Caesar what is Caesar's, but don't give any more than that. Right.
Exactly.
So make sure, I encourage everyone that sees this, make sure you have the right professionals around you, like Theresa, like myself, make sure that you hire a good attorney, because as you're going through a divorce, there is afterlife, right? There is life after divorce.
There is life after divorce.
And everything's going to be okay. Just make sure you surround yourself with good people, just like I've surrounded myself with Theresa.
Well, thanks for that, Jeff.
Thanks for joining us on Divorce Mortgage Strategies, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. For more resources, or to connect with a certified divorce lending professional in your area, visit divorcelendingassociation.com. And be sure to download the free Divorce Strategy Hub mobile app for tools, education, and support designed to guide you through the financial side of divorce. Until next time, remember, in divorce, the mortgage isn't the problem, it's the plan.